Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Recursion Pharmaceuticals.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you trade stocks, crypto, forex, gold, or indices and want clearer buy and sell signals, you can check out VIP indicators through my link below. Grow $100 to $10K with VIP indicators. VIP Indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate. The tools are designed to help traders spot possible setups faster and trade with more confidence. But please remember, trading is risky. No indicator can guarantee profits, and growing $100 into $10K is not guaranteed. Use these tools for education and analysis only, manage your risk carefully, do your own research, and never trade money you cannot afford to lose. This is an affiliate link, so I may earn a commission if you use it at no extra cost to you.
Yeah, definitely keep that risk management in mind, especially with what we're talking about today.
Exactly. All right, let's move into the wealth building context.
So, when you think about building true, lasting portfolio wealth, you're basically searching for assets that can compound in value over time, right?
Right, but the biotechnology sector is a notoriously dangerous neighborhood for that.
Oh, absolutely.
I mean, you often have these companies burning through hundreds of millions of dollars over like a decade, and it's all pinned on the hope of a single miracle drug actually making it past the FDA.
Yeah, it's highly speculative, which is why we have to separate Recursion Pharmaceuticals from your typical biotech lottery ticket.
Exactly, because looking at their profile, they're a clinical stage, pre-revenue company.
Right, meaning they have absolutely zero approved products sitting on a pharmacy shelf right now.
Zero.
Yeah.
So if you're listening to this and you want a quick quarterly return, or if you just don't have a stomach for massive volatility,
then clinical stage biotech is definitely the wrong place to deploy your capital. This requires a really high risk tolerance and honestly a strict multi-year mindset.
yeah, that's the essential disclaimer here. You're not investing in a single drug with Recursion. You're investing in the machinery that actually builds the drugs.
Which is a huge distinction. I mean, for years, the broader market looked at Recursion and essentially just saw a speculative artificial intelligence concept,
Right, they heard the AI buzzwords and just assumed it was hype, but we're currently witnessing their evolution into a validated tech bio platform.
Let's define that real quick because tech bio gets thrown around a lot lately. How is a tech bio company different from a traditional biotech company that just, happens to use some good computers?
Well, a traditional biotech company starts with a specific biological hypothesis, like, we think this specific enzyme causes this specific disease.
Okay.
And then they build this massive physical infrastructure just to test that one idea. Tech bio flips that completely upside down.
Interesting. So they start with the tech.
Exactly. They build a massive technological and data infrastructure first. They create an engine, and then they use that engine to generate hundreds of biological hypotheses simultaneously.
Wow. Okay. And Recursion calls their engine a lab-in-a-loop data system, right?
Yeah, lab in a loop.
Yeah.
And over a multi-year cycle, that underlying platform actually compounds in value because every single test makes the AI smarter for the next test.
You call it a compounding long-duration asset, but if I'm holding this for years, I really need to know the engine isn't going to just run out of gas before it reaches the finish line. Now let's look at the fundamentals.
And when we peek under the hood of their recent earnings report, the immediate numbers paint a really complex picture.
Yeah, let's start with the ugly headline because we really can't ignore it. Q1 2026 revenue crashed to $6.5 million.
Which is a huge drop.
Massive. Compare that to the $14.7 million they made in the exact same quarter the prior year. And they completely missed the Wall Street estimate of $16 million.
Yeah, they did.
So I have to ask, they completely missed a massive revenue estimate, and revenue was sliced in half year over year. In any other sector, the stock would be completely dead. Why didn't the market absolutely panic over a contraction like that?
Because context is everything in clinical stage biotech. That revenue drop is not a sign of failing demand, right? It doesn't mean their business model is broken.
So what is it?
It's just a quirk of milestone timing. Recursion doesn't sell software subscriptions. Their revenue right now is entirely derived from these massive long-term collaborations and grants with other pharmaceutical companies.
Oh, I see. So it's more like a general contractor getting paid in giant lump sums at different phases of building a skyscraper.
That is the perfect way to visualize it.
Like you pour the foundation, you get a giant check, Then you spend 3 months framing the building, and during those 3 months, your incoming revenue looks flat or even down until you hit the next completion milestone.
Exactly. Last year, Recursion successfully completed several major project phases with Roche, and that triggered milestone payments that artificially inflated last year's numbers.
Ah, okay. So this quarter, they were basically just in the building phase.
Yeah, exactly. The revenue is incredibly lumpy by design, but that headline revenue miss kind of obscured the real aha moment of the earnings report.
Right, the massive bullish pivot,
Hmm.
which is that their net loss narrowed dramatically.
Yeah, they went from a net loss of $202.5 million down to $117.5 million.
Wait, they cut their net loss almost in half year over year.
Yep.
In a capital-intensive industry like biotech, that is a staggering reduction in cash burn. How exactly are they pulling that off without just shutting down their research?
It's all through operational efficiency driven by that lab in a loop we mentioned earlier. Let me give you a statistic that should make literally any investor sit up and take notice.
Okay, let's hear it.
Recursion synthesizes 90% fewer compounds per program than the industry standard.
Wait, 90% fewer? Does that just mean they're taking way fewer shots on goal?
Well, they don't need to take as many shots because their aim is exponentially more precise.
Oh, wow.
Yeah, the industry benchmark is physically synthesizing somewhere between 2,500 and 5,000 compounds just to find one viable candidate. Recursion is doing it with about 330.
Okay, we need to decode how this lab in a loop actually functions in the real world. Because honestly, it sounds like magic, and investors shouldn't invest in magic.
Fair enough. Think of the lab in a loop as a continuous conversation between a supercomputer and a massive, fully automated physical laboratory.
Okay.
So the AI suggests a chemical structure that might cure a disease. Instead of a human spending weeks mixing it, automated robots physically build the chemical and apply it to diseased human cells.
And then what?
Then high-resolution cameras capture exactly how the cells react. That reaction data is instantly fed right back into the AI.
So the AI learns from it, tweaks the chemical structure slightly, and tells the robots to do it again.
Exactly. And it runs millions of these microscopic experiments every single week.
So because the AI is predicting how these compounds will behave before they ever reach a physical test tube, they aren't wasting money buying thousands of useless chemicals.
Right. And that explains how their R&D expenses dropped by 32% and their G&A expenses fell by 37%.
And that efficiency is built on a massive competitive moat, right? I mean, Recursion has curated over 50 petabytes of proprietary multimodal data.
Yeah, 50 petabytes is almost hard to comprehend.
Let's put that into perspective for you. A single petabyte is 1,000,000 gigabytes. If you took 500 years of continuous high-definition video, that is roughly 50 petabytes. It is an unfathomable ocean of biological reactions.
And it isn't just basic data either, it's multimodal. That means the AI is looking at the physical shape of a cell, its DNA sequence, and its chemical makeup all at the exact same time.
Wow. And they use this 50 petabyte ocean to train their TXFM foundation model, right?
Exactly. And a foundation model is essentially the same underlying technology as ChatGPT. But instead of being trained on the English language to write emails, TXFM is trained on biology to write chemical compounds.
And Recursion's TXFM actually outperforms 16 leading baselines in the industry, even when those baselines are trained on datasets 10 to 100 times larger.
Yeah, which just proves that Recursion's data has incredibly high signal quality. It isn't just noise.
Right.
Practically speaking, this translates to their clinical technology speeding up trial enrollment by 30% to 60%.
Because instead of doctors manually screening patient charts, the AI is finding eligible patients up to 40% more effectively by instantly matching genetic profiles.
Exactly.
That efficiency is undeniably impressive, but reality check here, cash is king in biotech. You can be the most efficient company in the world with the absolute best AI, but if the bank account hits zero before the FDA approves your drug, it's game over. What does their runway actually look like right now?
Well, because they lowered their cash operating expenses by 30% year over year down to $85 million, they're sitting on a very robust war chest. As of the end of March 2026, they hold $665.2 million in cash and cash equivalents. Management is confidently projecting that this money will fund their operations into early 2028.
Early 2028. That is the ultimate safety net for you as an investor.
Yeah.
It means they don't have to dilute your shares by issuing a bunch of new stock anytime soon just to keep the lights on.
Exactly. It gives them a multi-year buffer to let the science actually play out.
But having cash, a great AI model, is only step one. The money is funding specific human trials. That brings us to the catalyst timeline.
So in the near term, we have the Q2 2026 earnings coming up in early August.
Right, and the market will be watching closely to see if that fierce cash discipline holds up,
Mhm.
and obviously if any new lump sum milestone revenues hit the books.
Yeah, but the main event, the real value driver that investors are eagerly waiting for is coming in the second half of 2026.
Right, the FDA engagement for REC 4881.
Exactly. They're preparing a registrational study designed for REC 4881 to treat familial adenomatous polyposis, or FAP. This is where the theoretical AI math becomes validated human biological response.
And the clinical proof they already have is astonishing. In earlier trials, they demonstrated a median 53% reduction in polyp burden for these patients.
We really need to pause and realize the human impact of that data. We aren't just talking about improving a spreadsheet metric here.
No, not at all. FAP is a genetic condition that causes hundreds or even thousands of polyps in the digestive tract. These patients are essentially living with a ticking time bomb for colon cancer.
Yeah.
Cutting that polyp burden in half means dodging invasive, life-altering surgeries. That is a massive efficacy signal.
It truly is life-altering. They also showed a 40% improvement in the Spiegelman stage.
And for context, the Spiegelman stage is the clinical scoring system used by oncologists to assess disease severity, right? It dictates when a patient needs their colon removed.
Exactly. Moving the needle on that scale by 40% is exactly why the FDA pays attention. And on top of that FAP data, we're also expecting phase 1 dose escalation data for another asset, REC 1245, in the second half of the year.
Awesome. And if we zoom out for a second and take a macro view, there's an external catalyst that could act like a massive tailwind here.
Oh, the interest rates.
Yeah. If interest rate cuts materialize in late 2026, the entire biotech sector stands to benefit. But specifically, high cash burn, long-duration assets like Recursion will disproportionately benefit.
Right, because institutional investors use discounted cash flow models to value these companies. They estimate the money a drug might make 10 years from now, and they discount it back to today's value based on current interest rates.
So when interest rates are high, that future cash is heavily penalized.
But if rates drop, the discount rate drops. Suddenly, the future cash flows of a company with a massive AI drug pipeline look incredibly valuable in the present day.
So you have a company cutting costs, extending their runway to 2028, showing life-changing 53% polyp reductions, and potentially facing a favorable interest rate environment. And now let's pivot to the chart.
Yeah, because if you look at the stock's recent behavior, it tells a very messy story that kind of contradicts everything we just talked about.
Totally. I mean, if you're holding this stock, your patience is probably being tested. You see this great Q1 earnings report with narrowing losses. You read the incredible clinical data. And what did the stock actually do?
It dropped.
It dropped, it ran up, hit some serious overhead resistance, and just backed off. From a psychological standpoint, it looks like a classic sell the news event.
It is frustrating to watch, for sure, but we have to understand the mechanics of why that pullback happened. The stock is essentially resetting its base.
Right.
Remember how we discussed that the Q1 revenue crashed to 6.5 million because of milestone timing? Well, algorithmic trading programs scan headlines and react in milliseconds.
So they just see revenue misses estimates, and they automatically trigger massive sell-offs before a human even reads the underlying efficiency numbers.
Exactly. So the underlying machine of the company is getting stronger, but the stock price is taking a breather because the algorithms got spooked by the lumpy revenue top line.
Which basically washes out all the short-term momentum traders who are just playing weekly volatility.
Yeah, there's a wide gap right now between the current trading momentum and the intrinsic value of the company. The fundamentals are pointing up while the short-term price action is still digesting the recent algorithmic sell-off.
Right, so if the algorithm sold off, who is stepping in? So what does market sentiment look like?
If we look at the traditional analyst view, the mood is cautiously bullish.
Okay.
Morgan Stanley recently raised their price target to $5.50, though they kept an equal weight rating, meaning they want to see more proof before pounding the table. Needham, however, reiterated a buy rating and maintained a much more aggressive $8 price target.
But the immediate market reaction from retail investors was undeniably neutral to bearish. I mean, they punished the stock for that top-line revenue miss. So if Wall Street is cautious and retail is selling, where is the confidence coming from?
It comes from the smart money revelation. The ultimate institutional validation for a tech bio company isn't an upgrade from a Wall Street analyst. It is the financial commitment of their peers. Recursion has secured over $500 million in partner inflows from top-tier pharmaceutical giants. We're talking about Roche, Genentech, and Sanofi.
That is massive. These legacy pharma companies have patents expiring,
Mm.
and they need new drugs fast.
Yep.
They have armies of PhDs evaluating new tech. They don't just hand over $500 million because they like a PowerPoint presentation about AI.
Exactly. They validate the lab-in-a-loop engine with their own capital because building a 50-petabyte AI from scratch would take them a decade. They're essentially renting Recursion's engine.
And that dynamic naturally feeds into the broader speculative rumor mill.
Mhm.
There's a lot of market chatter right now that Recursion is a prime acquisition target.
Oh, for sure. You have big tech companies trying to aggressively break into healthcare, and you have legacy pharma companies terrified of being left behind by AI.
Yeah.
Recursion is sitting there as a fully functional, plug-and-play AI drug discovery engine. It makes complete strategic sense for a larger player to just acquire the platform outright.
It does make sense, but hope of a buyout is not an investment strategy.
Hmm.
We have to look at the realities of what happens if they stay independent. Now let's talk about the risks.
And as the risk-aware voice, we have to acknowledge the harsh realities of biotech investing here.
Definitely.
The stock currently holds a Zacks rank number 4, which is a sell rating. That directly reflects the near-term earnings headwinds and the algorithmic volatility we just discussed.
And beyond the balance sheet, there's binary clinical risk. We can talk about AI and 50 petabytes of multimodal data all day, but human biology is wildly chaotic.
It really is.
When that REC-4881 trial data officially goes to the FDA, if the regulators push back on the trial design, or if they demand more safety data, or if the efficacy doesn't perfectly translate to a larger patient population, the stock will crater.
Yeah, it's a cliff event.
Plus, because that milestone revenue is so lumpy, quarter-to-quarter financial modeling is highly speculative. That guarantees the stock will continue to experience violent swings.
Those are structural threats to the thesis, no doubt.
Right.
But we evaluate risks against their mitigations.
Right.
That binary regulatory risk is significantly de-risked by the sheer strength of the REC-4881 clinical data. Walking into an FDA meeting with a 53% polyp reduction makes the regulatory conversation significantly smoother than if they were fighting for like a marginal 2% improvement.
That makes sense.
And as for the revenue volatility, it's neutralized in the short to medium term by their massive cash runway. They have the funds to operate into 2028. They don't need the milestone checks to arrive perfectly on time every quarter to survive. They just need the long-term trend to validate the platform.
So with everything on the table, what's the final verdict?
The research points to a bullish score of 8 out of 10. To summarize the view, Recursion Pharmaceuticals is successfully executing one of the hardest transitions in the industry. They're moving from pure artificial intelligence hype into validated clinical tech bio results.
Yeah, it's impressive.
They've proven they can cut compound synthesis times by 90%. They're rapidly narrowing their operational cash burn, and they have the clinical efficacy of REC-4881 to anchor their pipeline.
Right.
The target horizon here is a strict multi-year hold. Investors need to have the patience to allow the 2026 and 2027 clinical catalysts, along with major partner opt-in milestones, the time they need to compound.
As you step away today, think about the fundamental shift happening here. We aren't just throwing thousands of chemical darts at a wall in a dark room anymore, hoping one cures a disease. We are looking at a company building the machine that knows the answer before the physical question is even asked. It is a completely different way of thinking about the future of medicine. And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is Grow $100 to $10K with VIP indicators, and their tools include TradingView indicators, market alerts, and trading education with up to a 93% win rate. But trading always carries risk, and no profits are guaranteed. Use the tools for education and analysis, manage your risk carefully, and always do your own research before making any trade. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.